Hello, everyone. This is Martin. Welcome back to another week of looking for trading opportunities. This time we're looking for opportunities the week of November the 14th to the 18th. And we're also going to have a look at what happened after this historic vote from the United States, the election results, how the news from the election results created kind of chaos in the markets. And we're going to take a look at some of the individual currency pairs to explain that. And now that everything is settled down, it looks like the US currency is strengthening against the other currencies, and it's creating a lot of volatility and movement in markets, and that's generally good for swing traders, for intraday traders. So when there's a lot of movement, lots of volatility, those are great setups for as great setup conditions for trading. I mean, you don't want to trade when the markets are pretty flat, so that's one good thing. And I think we're going to have a lot of good volatility and trading opportunities from here on in until the Christmas holidays. And the theme for this week is U.S. strength. And the one holdout, the one currency holdout is the British pound. You can see my cursor right over here. The British pound is the lone wolf. It's defying the nature of the other currencies. The other currencies are weakening against the U.S. However, the British pound has strengthened, and we're going to take a look at that and see where I think the currency is going to be headed. Okay, so that is it, and now we're going to get on to the charts. Okay, the very first pair is the Euro USD. This is the most traded pair in the world, and I guess there's a lot of experts looking to see where the Euro USD is going. There's a lot of volatility, as I mentioned, and a lot of the pairs look like they're trending. When I say volatility, you can see here this move from up here previously all the way down, and we were talking about 370 pips to the downside. We're talking about 300 pips to the upside, the same on the downside here. So, volatility is great for intraday trading and some swing trading as well. And here is the huge candle after the news. You can see with the early and what really happened with the election results as the numbers were coming out on Tuesday evening here in the Eastern time zone for North America. There was a lot of the U.S. strength. The U.S. currency showed a lot of weakness. So there's a lot of fear and hesitation in the markets. There was a lot of uncertainty as to what was happening with the United States. So as Donald Trump was winning, the U.S. currency was actually weakening. Price was going up. But then after everything settled down, late in the evening, especially during the London session after that opened, and things kind of returned back to normal in the United States once a president had been elected, or had won the election. You can see the US currency then took control and drove price all the way from its high here, all the way down here, and has continued dropping for the rest of the week. So here we can see with the Euro USD daily, the currency has gone down quite a bit, and it looks like it's going to continue going to the downside from here on in. We can see the currency is trending lower. This is the daily time frame. We are in a seller's market as confirmed here by the MACD. The MACD line is the blue line Here it's below zero, so we're in the seller's market. So we're basically looking for selling opportunities, and the smart conservative traders are looking for a price to pull back. We are at a support area. You can see that here, the gray rectangle. Here's previous support. So prices tested previous swing low. Price may come back a little bit higher, and then you can look for selling evidence to the downside, okay? And the best thing to do intraday, if you're an intraday trader or even end of day, is switch your charts to the 4-hour charts. Okay, I'm doing that right now, and you can see here we are at support. So what we want to do is wait for price to come back a little bit higher. These are the 8 and 21 moving average lines. So we want price to come back a little bit higher up to this area right here, and then look for selling evidence to the downside. Right now, price looks like it's fighting its way down. We're still in a seller's market. However, I would wait for a pullback first. And if price pulls back, what you want to do is then wait for price to go higher, and then sell below 108.80. So below 108.80. Okay. Um, let's take a what, or I'm sorry, 108.80, price pulling back. Yeah, so when price pulls back and then looking for a turn to the downsides, you want to take a sell trade below 108.80. Okay, now we get to the next pair, the British Pound USD, and this is what I'm talking about. Um, all the other currencies against US have weakened. The British pound actually has gone up, uh, contrary to what the other currencies are doing. So it is not correlating along with the Euro USD, along with Audi USD, along with the New Zealand USD. It's not moving in the same direction. In fact, it was moving up quite a bit higher, and you can see that right here. However, price did come down from a trend line here, from a resistance area, and this is the 50 moving average here. So let's go down to a 4-hour chart, and you can see prices pull back. So what we want to do is wait for the pullback to end. We're looking for buying opportunities. We are in a buyer's market, as you can see on the MACD below here. We are in a buyer's market. Wait for a pullback to end, and so we're looking for price to come down and then look for a reversal to the upside. Okay, that's what we're looking for over there. Um, and the best thing to do is if you can switch to a 4-hour chart, or if you do have time on your computer, even though you may be an end of day trader, and that means taking a trade at the end of the day. Once you take the trade, after you put in your stop loss, then just turning your computer off and taking a look periodically, or waiting till the next day to close out your trade, the next day. But if you do have some time, you can also switch to the hour chart, and let's just do that right now. So you can see price has gone up, it's come back down, made a new higher high. So here's a higher high to the previous high over here, made a new higher high. Here we've made a new higher low, another higher low here. So price almost looks like it's going to be going sideways. You're looking for a breakup to the upside. You can even draw a trend line. Let's do that. And what you're doing is looking to take a buy trade with a good bullish candle. That's what we mean by evidence. It could be a bullish engulfing candle or a bullish pin bar, having it close above the trend line. Your stop loss would be below here, below this area, below the gray rectangle, or below its previous swing low. Okay, and taking a trade. So your stop loss would be 72, let's see, 70 pips. It sounds like a lot, but remember, you're going to reduce your lot size then, okay? And your profit target is at least 50, 60 pips, but because of this trend line, in a trending market, it's going to break this previous swing high and it's going to go up much higher. So you most likely will make a 1-to-1 on that one, right? Okay. Um, if price goes higher, or you can take more of an aggressive stop just below the 21 right over here. And that in that case, if you get in right about there, let's say you're looking to get in above 126.30, okay? So you want to get in above 126.30. Your stop loss then would be around 51 pips. You're going to make about 51 pips to the previous swing high here, but most likely it's going to go higher. And it's good for at least 70 pips or more. Okay, so that's what I see there. And but right now I see price is still going to go sideways for a bit longer. Next, we have the Australian USD. Now, here, price has dropped like a stone. We are trending lower, so we're basically looking for sell trades. Again, the MACD has now crossed below the zero, which means we're in a seller's market. And I believe from here, price is going to just go down a little bit lower. Here's the 200 moving average. The 200 moving average acts as a magnet. It's going to draw price right to it. And again, you can see, look at the previous swing low. So if price comes down lower or below the 200, it's going to come down to this area right here. At this point, you can look for a swing buy for a reversal in price to come down lower, and then look for a bounce off the support. Okay, but right now you might want to just wait a bit, and the reason is because we are still at a trend line. This is dynamic support. um, okay, this trend line here. And so you may want to wait for a bit of a retracement first or a pullback, and then wait for price to come down lower. Okay, so during the week, I just want to show you one thing. Here you can see, let me just zoom. See, we had a huge bearish engulfing candle. So that's why I'm saying most likely price is going to be heading lower down to this area. And we just have to wait for the proper entry. And the entry is, if you're conservative, you want to wait for a pullback, especially after a big, huge, long candle like this. So you want to wait for a uh, pullback and then look for selling evidence to the downside. Okay. Now we've got. Oh, I just want to go to the LEOD. You can see here the LEOD, same thing. Um, so price did break below the yellow line. It did break below the trend line here. If you take a sell trade right now, your stop loss would have to be way up here. So that's really too far for a stop loss, okay? Because with the LEOD strategy, your stop loss has to be above the top yellow line, and on the daily chart, it is really too far away. So you want to wait for a pullback for a better risk to reward ratio entry. Okay, now. Australia is tied in heavily to gold, and you can see gold has done the same thing. It broke a support trend line. Gold has fallen quite a bit. However, gold is at near support right now. And again, if we were to go to weekly chart, I'm just going to draw this in for you. Let's draw in a support zone. Okay, so you can see right here. Okay, right here, gold may come down a little bit further. Okay, you can see it can still come down further to meet up with the 100 SMA in this gray rectangle. So here's a confluence of support, and then most likely it's going to bounce higher. Okay, so just watch out for that. If you're going to take a sell trade or you're going to take a gold position in gold, it could come down lower, but most likely it's going to bounce once it goes down just a wee bit lower. And again, because gold has come down in price, it's this is the weekly chart again. You can see this huge bearish move. Let's go back to the daily. Okay, here's the daily chart. So with this huge downward movement last week, that correlated with the Australian US dollar right here. You can see, so it moved in tandem with the price of gold. Now we get to New Zealand USD, and the New Zealand pair also correlated with the Australian USD, with the Euro USD. So all of them are moving in the opposite direction, which means that as New Zealand is moving down and becoming weaker, the US currency, the counter currency here is actually strengthening. Okay, so a big down movement like this on the New Zealand US means that New Zealand is weakening and the US currency is getting stronger. So that most likely looks like that theme is going to be extended this week. But I believe we're going to have some pullbacks first. So after this strong move down, we've now hit a support zone right here. So what we want to do is wait for a bit of a pullback, then look for selling evidence to the downside. Okay, and the same thing as with the Australian US dollar. I want to switch the chart to the weekly. And let's zoom in. Okay, you can see this huge black candle. That again is a bearish engulfing candle. On one of my training sessions, I nicknamed this the Big E, which means the big engulfing candle, which happens on the weekly time frame. And what it does, it gives us really good, strong evidence that price will continue to the downside. Okay, so here back to the daily chart, you can see that we still have room to, once price breaks the support zone here, price has a long way to go to the 200. And let's take a look. Okay, so another 100 pips or more. If it breaks that to the support area, another 150 pips. So that's another pair you can watch with earnest. Right now, MACD has just started to cross the zero level. However, um, this is telling me and showing me that that momentum, we're heading into momentum. So the momentum right now is not behind the price movement, but we're kind of moving into momentum. Or let's put it in another way that you can understand. Price is moving into the wind, which means price is most likely going to stall, go sideways, go back higher, and then possibly make another break to the downside, breaking the support here. Okay, so that's what you gotta. So you may not want to enter right now. Price most likely is going to go higher first and then down. Okay, now we get to the USCAD, and this currency pair, as you know, coincides with the price of oil. Oil has been tanking. It's been going down, down, down. So that means with this pair, the US CAD, um, let me go to the daily chart. There we go. It just means that U.S. currency is strong against the weak Canadian dollar. Okay, and that's why you see this pair going higher. So we had three huge up days, and I believe the currency is going to continue going higher. It's got a long way to go. This could be one of the best pairs to watch, but it depends on what happens with oil. So oil, I believe, could come down a wee bit more, but we are kind of overextended on oil, or if we want to use another terminology, we are almost oversold on oil. It could come down a wee bit more, but it could bounce up pretty soon and reverse just a little bit higher. So that means this could go up a wee bit more and then reverse to the downside. But let's take a look. I want to just zoom out a bit and let's take a look. Okay, so in the short term, oil, I'm sorry, US CAD pair can go from this area right here, from the highs here, all the way up to, I've drawn in this magenta line right here. You can see this horizontal line. So right now it's got room to move at least another 300 pips higher. But in the long context of things, I've already drawn in a major resistance zone. Here's a previous major swing high that was formed at the beginning of this year. The latter part of the end of last year, beginning of this year, and so if price has a good chance to go all the way higher, possibly, and we're looking at like 900 to 1,000 pips. So keep your eye on this pair. Keep your eye on oil to see how the US CAD responds to the price of oil and other really good, strong news that may come out from the US. So, strong employment news, possibly even interest rate hike from the US, and that obviously will make the US currency jump up to the moon, but in this case, up to the uh, previous swing high here. Okay, so I'm going to go down to the daily charts. Let's just adjust for a second. Okay, so right now, what you can do is take a buy trade now, but again, your stop loss would have to be down here or below a. If you are a conservative trader, you'd have to put your stop loss below the swing low, and that is too far away. Let's take a look. That's 287 pips. Okay, that's on the daily chart. What you want to do is take an entry off the 4-hour chart if you're an end of day trader, which means you see how this last candle has just gone up? You don't want to take a buy trade right now. I'm sorry, but it's already gone up. You don't want to chase the trade. What you want to do is wait for a retracement or pullback, just like here. Even if that means watching one black bearish candle, but here is a better pullback. You see this right here? That's a better pullback. So what you're doing. Okay, what you're doing, you're looking for price to come back down here and then turn around again to the upside. Okay, that's what you're looking for. And a good area would be maybe right about there. Okay, so you can do that. And that's what I would do if you are more of a conservative trader. Never try to chase a pair. Always wait for pullbacks. Let price prove that the your entry is the correct entry. Okay, and that means when I say correct entry, pullback. Your stop loss would be then either below the 21, below the 50, or if you're really, or below the 100 here. But the more the price comes back toward the moving averages, the better your entry will be with regards to risk to reward. So your risk will be smaller, your reward will be the same and more than your risk. Okay, so that's that. And then now we get to and just a quick look at oil. You can see when I said oil could come down a wee bit lower, but we are at a major support zone. So if it comes down lower now. This is really, really important. Price may come down lower, break the support, okay? It may do that, but it could be a false breakout. And what that means is that price could come down. Oh, just a second. I've got the wrong marker there. Okay. Price could come down a little bit further, but then all of a sudden, false breakout and reverse, taking out all the people who are looking to take sell trades. Okay, so that's not what you want to do, especially at this major support level. Okay, so you want to be careful. Don't just get into a trade just yet. Wait for a pullback or wait for a bounce, and then you could possibly take a buy counter trend trade, right? But if it does break out, then look for good evidence to the downside. And what you want to do, if again conservative, watch price to go higher, and then look for a. Um, let's just take a look here. Yeah, you want to just wait for price to go higher and then look for selling evidence to downside or sell below this area right here. Okay, now US Swiss franc, and let's take a look. Here you can see, look at this huge pin bar. I mean, that's amazing with the election results. I mean, price actually was good in the during the daytime session. The US went higher, and then all of a sudden from here it went down all the way with the news that Trump was winning. And then after things settled down and the US president was voted in, price reversed and again showed US strength. And then from that day, Thursday went higher. Friday is an inside bar, though you can see it's a bit bullish, but it's an inside bar, and this usually means that the movement to the upside will continue. Okay, so we had an up candle here previous on Thursday, Friday. It's an inside bar, so you could actually take a break above this high right here. Okay, and let me just go down to the okay. Let me just switch to the 4-hour chart. Okay, so again, you could take a breakout above the, in this case, you're going to do 099, 099, 10. Okay, above 099, 10 for a breakout above that or a close above that, then price most likely will go much higher to the resistance area there. Okay. And then finally, we got the U.S. Japanese, and that also, just like the U.S. Swiss franc, look at that. I mean, look at this huge. How many pips is that? Okay, so it went from here. That was 384 pips to the downside and then closed up another 80 pips higher. So that was about 450 pip movement. Quite a volatile day, I would say. And then the next day, that was another huge move, right? That was the Thursday right there. And that also moved up quite a bit. So that altogether, it was a total 182 pips from low to high, right? Now we're in a pullback, okay? So this is really good to know that most likely price will head a little bit higher, but we are in a buyer's market, as you can see by the MACD here. We are in an uptrending market, so we're looking for buy trades, but we want to wait for this pullback to end. So we may still go sideways, price may still come back down. Let me switch to a lower chart. Okay, I've drawn in a trend line, you can see. So here you can see we're just going sideways, sideways. Price may still come back down a little bit lower, okay? And you're looking for an entry right about here, or looking for buying evidence to the upside. Now, right now, again, we're in the buyer's market on the H4 chart, so that's the 4-hour chart, but the momentum, the wind behind the sail is not yet formed. You can see with these red histo bars. So it's a bit of a primer on how to use the MACD. Once these histo bars get much smaller toward the zero here or become green like this, okay, and turn green, that is the wind behind the sail. That is the wind behind the MACD, and that momentum pushes price higher. So if you take a look right here, look where my cursor is. If you take a look at that, that's the kind of pattern you're looking for in the MACD. We want that to form up here to push price much higher up to this area. Okay, so in this case, we're waiting for a pullback, and you want to wait. You want to take a buy above the 106.20. Okay, 10. So we're waiting for a pullback, buy, and then look for buying evidence above 106.20, or you can buy now above 106.80. So you can buy right now above 106.80. If you do that, though, remember, depending on your risk personality, if you buy about there, 106.80, then and let me go, yeah. So if you do that, then your stop loss will then be below the trend line, okay? Or it could be right there, okay, or even below the support zone here and the 21 moving average. So again, it's your risk personality that determines where you put your stop loss. Now, the next monthly meeting that we're having, it's going to be a good one. I'm going to actually talk about how to place stop losses correctly based on your trading personality. So stay tuned for that for those students here in the Toronto area. Okay, so that's it for now. Happy trading. If you need any help, give me a shout, send me an email. In the meantime, take care, and we'll talk to you again soon. Bye for now.